Hello everyone. Got lucky for yesterday's longs. GFS is gapping up 12% because because of the quantum computing news. US government is going to take the equity stakes of many quantum computing firms, and Nebius is also gapping up by around 10%. Ooh, a partnership with BE, and the market is gapping down, which I like a lot. I really do not want to see a gap up today, especially with the individual stock sections that lots of the individual names are actually green while the indices are opening red. A lot of them are gap ups, and the indices is actually pulling back, gapping down into support. IWM 60 minutes EMAs starting to cross the faster moving ones are crossing above the slower ones. Qs and spies is gapping down into the rising EMAs. And not sure, but I think I may buy some opening range breakouts today as the market is gapping down, and there would be a high chance that we would see a bounce, and it could increase the win rate for opening range breakout. And Tesla is doing a really solid reversal from the 50 and 150 EMA weekly also. Now it is gapping up above the anchor VWAP from the swing high made last week. And oil is trying to reclaim the EMAs. Let's see whether we would get a fade or oil still trying to hanging above the 100 level. Oil is not a really big focus right now to me. Oh, I really like this pullback on the indices. IBKR is not filling my order. I submitted a market order, but my QBTS order is not getting filled. I don't know what's happening. I bought it at the first minute. Wow, it is. I get filled right now. What? It's like a 4% slippage. Oh, I'm just gonna use the low of day. It would be a 1% of my equity for the risk. But it's definitely not intended. EXYC. Yeah, I actually. Yeah, but it's too late. Yeah, I actually noticed this one. I have this when when I'm scanning my watch list. Yeah, today's looks like it's breaking out, and there's a really decent entry on the breakout on the 15-minute candle, or just use the opening range high breakout. Yeah, it is, but it's a little bit illiquid. Not like if it's trading maybe like 400 million or 500 million, that will be a bit better. Okay, I think no more trades for today. Hopefully the market can hold the opening low or just go sideways from here. Cypher is the only one that I'm really wanted to find an entry. But I was too late. I'm too late today. Like to see a pullback, undercut the 9 EMA and reach the anchor VWAP on Cypher. Maybe undercutting the anchor VWAP as well. Not sure. I think that yes, if it's going to stop me out today, any pullbacks on to into the low of the gap area, like 204 or maybe 203, unless the EMAs to catch up a bit, and it will be another entry point that I will look for. I mean, same as Tesla. So Tesla pulls back into the maybe 60-minute 50 EMA or the 9 EMA will be another support. Our GTI is also doing a wonderful job today. This weekly candle is wonderful. So we are getting the largest 15-minute volume since October last year. Do you think Circle needs more time? Yeah, Circle. I think this is one of the names worth mentioning. I'm not. Yeah, I'm losing my interest on the crypto names as the cryptos gets weaker, and a lot of the names are under the EMAs, and some of them is bouncing into the declining 9 and 21. Then we are not seeing a huge breakout, like a quick push to the upside. So right now, not gonna try the longs on the crypto names, although I kept focusing on them in the previous weeks. And Circle looks pretty good, like it's holding the edge of VWAP and a 21 EMA, and it's probably one of the strongest names, strongest crypto names, rather than Mara. Is Mara a crypto name? I'm not sure. Yeah, Mara might be the strongest one. Maybe it needs a little bit more time. Like Tesla, this is the stop is too tight. I'm just using a 30% position size, but like the stop is only less than 0.4%. I think it could be like around 1% is fine. And I don't want to like get stopped out multiple times and then, but it's perfectly fine when you use the 1 minute candle low or maybe the low of this gap down, like this unfilled gap, somewhere like 417. But it's not really like a hard rule, like or you must need to put it on the day low or put it below the gap or below the 5-minute whatever EMAs. It's just you just buy your it's just by my personal preference. Rocket Lab looks pretty good, finding support, building a flag. A lot of names are looking really nice after the pullback. But this is what you want to see the market to do when it's in an uptrend, finding support at where it should. How did I infer that the opening range breakouts would be great for entries today? Was it the gap down on the indices? Yes. That's why I really don't want a gap up on the indices today. Like most stocks moves together with the indices or the general market, and if the indices are gapping down into the support, they're gonna have a higher odds of finding in support and getting a bounce, and it would also increase the probability of getting a successful opening range breakouts, especially when the individual names are like stronger than the indices. SNDK is pushing higher. Yeah, so I really like that GFS is pushing into all-time highs today with some volume. Intel is building a flag above the 9 EMA, building a base, maybe not a flag, after a 200% move in just a month and a half, less than a month and a half. The next breakout is gonna be explosive, I think. Today, just pulling back into the 9 EMA is and feeling part of the gap. So crowd, looking back, like the best entry points are I think for pullbacks. Yeah, I think this Thursday, this candle pull back into the 21 EMA, and the weekly 50 EMA is the best one. And then the next day we got a gap up and pull back into the 9 EMA and probably the anchor VWAP from this swing high too, or maybe not undercutting it a little bit too much, but it's like 60-minute pulling back into all the EMAs. That is the second one. Third one is the pull back into the 9 EMA as well as the previous probably anchor VWAP level around, and the previous highs too, like this 457 level, several highs around this level, several touches. This yeah, this 3 is the really good one, and I think it's easy to find. And on the way up, actually, if you look back, just imagine trading in hindsight. I think just buy any one of these days and then use the stop, set the stop at the low of day. That crowd never violates the previous low of day. Like every low of day is higher than the previous day. So it could be also a supplementary or alternate entry tactics if you missed the pullback and the stocks is gapping up into the no man's land. There are lots of the straight up to rally in this couple of weeks. Something like Intel here, like after this huge green candle, like every low of day is higher than the previous day until here. Yeah, so that's how I look at the charts and try to spot any potential entry spot or the strategies that could be used to find a tight risk entry. Would I use any software to manage and track my positions? No, not really. Is TLN a good short setup today? In a weak market, yes. But in a strong market, I'm not a fan of playing against the market. Yeah, technically, it is bouncing into the EMAs. Like the 21 and 50 starts declining or like staying flat. But now is a really strong uptrending market. Is BE a good breakout today? I don't think so. Technically it's not really good, but yeah, but it could be an entry. Like if you just buy the opening range highs breakout and then set the stop at the day low, then it works really well. It doesn't. Yeah, I don't think it's a must to really to wait for the best pattern to form. Sometimes when the market is gapping down today into the support area and BE is gapping up, and it's one of the strongest stocks in this market, and I think as long as you're not really going crazy with the size and the risk, it's okay to just take it and then maybe use 8.3% or less of risk per trade. to test it out. How do you know when the bottom is found and the stock is not going lower? I don't know. No one knows. You don't need to know when the bottom is found, and you will never know. But you just need to react when the stock is pulling back into the support levels, and at best like multiple support levels, and you will have a higher chance of finding support and continues higher. It's not about predicting, it's about reacting. You can never predict a stock's movement or market movements. I'll soon be working in 9 to 5 in Europe where the market opens at 3:30 p.m. I study tight entries. I have no experience with limit orders. How would you handle that? It's really hard if you're working the 9 to 5 and trading at the same time, especially when the market opens when you're still in your working hours. Yeah, I think it will be really hard. Yeah. Yeah, sorry, I don't have any tips or like opinions on that. I really uh, found it difficult when you are trading and working a a job, especially a full-time job at the same time. How do you calculate the amount of shares you buy so quickly? Do you have a position size calculator? No. And first, like IBKR has a it has it it's gonna it has a it automatically calculates your position size after you type in your amount of shares. And second, when you are like, I think the more you do it, you get it quicker and quicker. The examples I mentioned about Intel and Crowd, how many up green candles is a good confirmation that the following has a higher chance of green. Actually, I just found it out just now with all of you guys. I don't know. Do your own work. But my opinion is the earlier the better. I just want to put it at, if not the first day, then the second or the third. I'm not a fan of buying it on the fourth day or even later. Why did I choose QBTS out of all the quantum stocks to trade today? QBTS is the strongest one apart from RNQ, which I've already bought it yesterday. But compared to RGTI and QUBT, QBTS is the strongest one, especially on the weekly. I think you can easily tell which one is stronger one. How to avoid yourself from buying every dip or over trade? Yeah, I think it's really hard. But one thing for pullbacks is the stronger the market, like no matter it's an uptrend or a downtrend, the stronger it is, the better the pullback. The better the pullback works. So determining the current market environment or condition is quite important. And actually, I don't have a really solid answer too. Like, actually, I also overtrade a lot, so I really don't have like a really good answer for that. But maybe like a pullback in, at least you need to want to pull back into a daily EMAs. I think it eliminates maybe more than half of the random buys. Would you mind taking a look at the stock NAVN? I think yes, and yeah, a lot of you guys are just like mentioning the one of the stock ticker, like for example, maybe like Tesla. Like, if you look at Tesla or what do you see on Tesla? And I don't think it's a really good question. I think a better question would be like, is yesterday a good entry point on Tesla? Like a certain like 255 or something, like I don't know, like 400 yesterday, or a 5 minute breakout yesterday is a good entry or a good exit on a certain stock, or I'm looking for like a pullback buys on certain EMA on certain tickers. I mean that would be a much better question, because I don't have any context on what are you referring to, and I think a lot of stocks are actually not worth looking at, like the random stocks, liquid names. And what I think, or what my opinion is not really important at all. Whether I think like Tesla could go to 500 or something is not important at all. A few months ago, I mentioned AEVA on this breakout day because I missed it, and I said it's gonna go to 30, and 6 months later, it's now, it never went to 30, and it's like $21 now. So yeah, my view and opinions are really useless. So let's go back to NAVN. Like technically, I don't like it is now trying to lose the 9 EMA after like a few weeks of going sideways above the 9 EMA, and today is looking a little bit weak and started. And I think it's too early to say, but if it closes below it, it will be a pretty weak sign. But I'm not going to. I don't know. But given this, the previous action, it does find support on the EMAs, or maybe the 9 and the 21 and 50 EMA. So maybe it's better to wait for the pullback into the 21 EMA and let the weekly EMAs to catch up a bit. But this is a little bit too liquid, and yeah, not a fan of the liquid stocks. Lemaki had exactly that as a rule and banned people. Yeah, I'm not gonna ban. I think at this moment I'm not gonna ban anyone, except showing disrespect to other audience or doing something rude. Yeah, but I get his point. I get his point. In my trader line interview, you said 80% of what I learned came from Christian. When you're looking at your trading, I didn't really see many similarities between him. What did he teach you? Good question. I think many people are focusing a lot on the setups and the technical side, or like pattern side of trading, of Christian's trading. And I think it's not necessarily true, or like not the perfect way of learning from him. I think the biggest influence from Christian to me is defining your stop and tighten your stop. So like in the early stage, I used a pretty wide stop, like maybe 5 to 8%. I actually mentioned it before, and I came across Christian, and he always set his stop at the low of day, mostly around 3% generally, and he always sticks to that. Like whenever he enters a stock, he's just gonna put his stop at the low of day. So he's really clear when where should he exit a stock, and it's really clear. So it's not like entering it with it's like um, determine the stop before you enter it. Determine the stop before you enter a stock. So the one of the major influence, I would say. And then I think another one, really another huge influence is the stock selection. Christian always prefers the liquid names and the fast moving names and the orderly moving names. So he won't trade the ones with like the keep chopping around or like moving 1 to 2% each day. He loves to find a stock with the right theme. Like theme is another thing, and with volume and clean to trade. Yeah. So talking about theme, I think theme is the one of the major things that I learned from him. But before that, I really focused a lot on the pattern itself. I forget about like actually the stocks are moving as a group, and certain group would like outperform the whole market by like just drastically, and give you like superior return, or like beta, you would say, or alpha. And then like exit rules, you have a lot of like trailing it with the 9 or like 21 EMA. Christian used 10 and 20, but I think it's the same thing. And I really found it powerful and simple. Although I'm not always using the trailing stop, and I'm not actually doing that well. But yeah, the exit rules. And then I think let me, yeah, I think that is like technically, or like the chart wise, or the jet. This is more like I don't know, more practical side of trading. And then there's a lot of mental side of trading, or like the other parts of trading as well. For example, I learned to always think in percentage of your accounts instead of the absolute numbers. The Christian, I believe he bring this out and emphasized it a lot. And he said a lot of the thing that really separates a good trader and a great trader is the ability to scale up his account. And the reason why those traders cannot scale up their accounts is they just focus too much on the numbers, the absolute numbers. Like they are making 100K or like 1 million, but that's not important at all. Like always, you should think in percentages, and I really think it elevates my trading by a lot. And then like just focus on like the percentages instead of the like the numbers. So that's why some of you guys are like asking me how to grow a small account fast. And I think just and my answer is just forget about you're trading at a small account. Like you just treat every trade, or like to just only focus on the percentage of your account, or like maybe the number of risk multiples, like how many R's you earned in this trade instead of how many money you earn in this trade. And another really good point from Christian is he said he just took 1 or 2 things from this trader and like learn 1 or 2 from this guy, and then learn another 1 or 2 from that guy, but not like completely copying them like 100%. And I really agree with this. Really resonates with his points. And a lot of people are just like trying to copy a certain trader, or like a certain setup, certain rule, certain stock picking techniques, or like uh style of trading, etc. But you need to form your own style. I think that's just really a small part from his like trading philosophy, or uh his style of trading. But I think too many people are just focusing on like the patterns or the setups. So will I calculate my position based on real-time position value, or updated when it hits some century marks, like 30%, 50%, etc. Real-time account value. Okay. Uh, yeah, I calculate my position based on the real-time account value. But generally, I would just, if I'm having a chunk of profits, like unrealized profits, then I would take maybe like 10% a discount for the account value, to prevent a general market pullback, and then a oversizing for for the new positions. How much exposure I have now? Um, so if 100% is full pot, like a full portfolio, I think now it's around 250%. Yeah, I mean fully invested, like 100% is fully invested, and then now it's around 250%. Should be less than that. Is there any daily average dollar volume I look for? Now I actually raised it to like 200 million. I just updated it on my tier 2 watch list, and I think like from my experience, I think the stock with more than $200 million volume works better, and like the spread or the slippage is easier to trade, like it's acceptable. I don't use a trading journal subscription. I don't pay for it. I got on IREN yesterday. How will I manage that position? Um, right now I'm just going to sit and wait. Either I got hit by the stop, or I don't know, maybe sell some into strength at around maybe 60 above this high, maybe somewhere near like between 76 to 68. Maybe. I find it very hard to position size, i.e. above 15%, and I've never used the margin except some future trades. How to fix that? What's the reason behind it? Like why you will find it very hard? Is this that like mentally uh you cannot take the loss when you're sizing big enough? I think I fear gap downs, and sometimes I am paralyzed by big losses. I totally understand it. I think it takes time. Like every change takes time. Maybe you just tried trading a few more weeks or months. Like after you have made maybe hundreds of trades, and you gradually like get used to it, or maybe not, but it's completely fine. Like if you can keep trading with like 15% position size and not using any margin, is completely fine. But at the same time, you have to accept the fact that maybe you will not get a really like you cannot how to describe that? You cannot benefit the most from the best environment like the previous weeks. Like if you have, if you can, if you trade on margin, like from this rally, like during this rally, versus not using any margin on this rally, like the results could differ a lot. If you decide to not to use it and use a smaller size position sizing, then you have to accept sometimes you would like kind of like underperformed in this type of really good trending market. So it's always a man, my English. When you win some, you lose some. Like you have to take both the goods and bads, the pros and cons of your choice. Yeah, trade off. Yes, and on the other hand, if you are like taking a smaller position sizing, not using margin, then you probably will have a smaller drawdown when the market starts pulling back, and it may help you to like hold your winners longer, and that's all the pros. So it's really like a trade-off, and whatever suits your personality, that would be the best. Yeah, I think the previous question is a really good one. I don't really think like everyone needs to trade like me, or like to really be aggressive, or use a really tight stop. Just like Christian said, just take one or two things that sounds interesting to you or works for you. That's good enough. I remember you said stocks are now moving faster and faster. They can go up without any obvious setups like FPS and EMPH. How you actually spot them out? I only know weekly charts sometimes give insight. I think EMPH is a tricky one because it's one of the beaten down names. Goes down, like keeps going down from late 2022, went down by 92%. And I believe the first reason is the group strength, like the solar strength. So solar war is somewhere like here or here when I started spotting and focusing on EMPH. So it is on a pretty strong uptrend. And SEDG is one of the names that I also tracking. But SCDG is not the type of stocks that I would love to trade. Like comparatively, EMPH, although it is much weaker compared to SCDG, but I think it's less choppy than the EMPH is less choppy than SCDG. So I think it's easier to trade, and SCDG is like building a base above the 150 EMA and then keeps finding support. And the weekly chart, it is like at the 21 weekly EMA, and at the previous I think the anchor VWAP level, the anchor VWAP level from the previous swing high, and First Solar as well. So it keeps finding support at the 150 EMA, and this is the 30th of April. Yeah, so yeah, and spotted the strength from the peers first, like First Solar and SEDG. But why not First Solar, but EMPH is like EMPH is the faster moving names. And another important point is still trading above 100 million daily dollar volume. after getting beaten down by 90%. And to me, if a stock is still kind of liquid, I would say above $100 million volume, I would still keep an eye on them until it started to get illiquid. I have another example is Kafana back in 2023. Kafana is also down by 99% in just a year and a half. And then after the first rally, like and actually when Kafana is down like more than 90%, it's still trading above like $200 million volume per day. It's not commonly seen for this type of beaten down names to be liquid at the same time. And then after the first leg up, and during the pullback, it's like around $100 million volume. And with the previous days, like during the down days, it's still like trading pretty liquid. And I would really love to like trade those beaten down names, but at the same time being liquid as well. So it kind of shows like there's some buying and selling powers at the same time. So when the stock starts turning up, like there could be more buyers than the liquid ones. I don't know if I described it correctly or not, but I just think if a stock is beaten down and liquid at the same time, that I think it has the potential of getting a huge bounce. And it's easier to trade when the stock is liquid, even though it has got beaten down. So zooming in on the daily, and EMP starts following the 9-day, find support multiple times, and yeah, I don't know. Maybe it's a feeling like really is pretty abstract feeling for this exactly like EMPH. But still, like I missed the first leg up because I got shaken out on the Tuesday pullback. But the main thing is it's completely fine to like miss the first leg up. But you see, during the leg up, it's trading at more than 1 billion. And for market cap, for like 7 billion market cap stock and trading like 1/7 from of its market cap is amazing. It's really liquid, and I think like a liquid stock could be more explosive. Fuel cell is another example, probably. But not during his like beating down times, like not back here. It's like trading like 30 million or like 20 million on the way down. So I think I'm not tracking this thing, but I think right now it's certainly being more liquid, and probably on the first leg up, or maybe the second. I don't know. I really prefer like 200 million or more. So yeah, that's why I just skip those liquid names. I think I found this characteristics or like minor details when like after 2022. Like 2022 are the bear market, and a lot of the names are going way lower. So there's a lot of like charge points, I believe, like going much lower, and yeah, and this thing gradually loses its liquidity. Like it's actually not that liquid during its peak, but like it's not even trading more than 100 million when it got a 4 or 5 billion market cap. Yeah, I'm not sure about this one, but yeah. but maybe it's just coincidence. Maybe it's just a coincidence. Is that $200 million volume turnover or average dollar volume? Yeah, it's not really a fixed rule. Like sometimes I will still trade the stock less than $200 million volume average, or like no matter, or on that day or the previous day. But maybe the past 3 to 5 days is the best description for that. So I would still trade a stock with like $195 million volume. Maybe like it's not really a big deal. Oh, sorry, I'm muted. Oh, yeah, I think the big picture, like the weekly, is great. It's like pulling back into the 9 EMA and it's riding the 9 EMA all the way up. So the weekly is great. The daily is okay. One minor details that I don't like is now under the previous, like the huge red candle day low. So it's the low of the previous base, and it's gonna act as a resistance, and it's like overlaps with the 21 EMA. So it could be a resistance level, yeah, on this like 49 or 50 level. And the intraday, I think it's really hard to find a tight risk entry. Like for my style, like I would love to see it, like to see a gap up above the 9 EMA on the 60-minute chart, and then we can use the low of day, and it will be like a tighter stop than a gap down. Like, and there's even another flush to the downside before the reclaim. So you would need to, like, your stop will be a little bit wider than, yeah, but than the ideal one, because I love to use the 60-minute 9 EMA as the like a smaller time frame confirmation of trend changes. Yeah, but that's just my view. Like I would love to use this 60-minute 9 EMA. Yeah, but if you somehow bought it with a tight stop somewhere, I don't know, if you use a 5-minute or a 15-minute candle stop, then I think it should be okay. How did I get over the idea that my tight stops, your tight stops are statistically in the noise according to ATR? You'll land a couple of winners with high risk reward, and you prescribe to this extremely tight stop. It definitely, ROM is not built in one day. It's like, is that a correct saying? Yeah, ROM wasn't built in a day. It's like it's a gradual change. It took months, if not years. Like at first I used maybe like 7% stop, 5% stop. Then I gradually tighten it up to like 3%, 2.5%, 2%, 1.5%, 1%. And it also like it is combined with my with my entry skills, like improving entry skills. Like at first when I'm using a wide stop, I don't know what is like my entry was really poor, like chasing the extended names, like buying a stock when it's already up 10% in a day. So definitely, if the stock is up 10%, generally the low of day, or like the low of day would be like maybe 7% or 8%. Then you need to have you need to set a really wide stop to achieve that. Well, so I think I talked a lot today, and this is the end for today. And thank you guys for coming. See you in the next one.